Welcome to Drill Down Earnings. We've got quarterly results from Texas Instruments, the granddaddy, the great granddaddy of all the semiconductor companies. Q2 earnings. This is the business story behind one stock on a move. I'm Cory Johnson, Futurum Group's chief market strategist. Texas Instruments tells us a lot about what's going on in the memory business, and not everything is AI. Not everything is good. Q2 earnings beat some estimates, in line with other estimates, and the stock popped initially a little bit. Don't be fooled. This was not the turnaround we're waiting for, not the turnaround Texas Instruments is waiting for. And now in the quarter, the headline numbers, $3.82 billion in revenue, net income of $1.13 billion. So a lot of profits for this company, but revenue down 16% on a year-over-year basis, although it was up 4% sequentially. And specifically the industrial business, the automotive business, both of those big businesses for TI or TXN, depending on how you go, both those businesses in decline. Although they've been through this more than just about anyone, they know that they've got to continue to turn a profit during these downtimes because that's the way the semiconductor business goes. And it's just not going great for TI and a lot of other similar companies. And so you see it across all the numbers, revenue sliding, yes, well, EBIT margins or operating profit margins also slipping. $1.3 billion in operating profits is nothing to sneeze at, but that's down 19% year over year. In fact, if you go into the major segments, both analog and embedded processing, analog rose, their margins down 36%, or down to 36%, I should say. Their embedded processing business, also profitable, those margins were at 40% about 2 or 3 years ago. Now they're at 13%. So profitability slipping along with revenues. How did the stock react when the numbers came out? It went up because there were fears that it could have been worse. Stock was up 3%, and on an 8% year, another 3% is pretty good in one day. But the CEO was asked about what this means. You know, there's a lot of concern that as China is not able to buy the most advanced semiconductor lithography equipment, they might go downstream and try to dominate the, some people think of them as older or slower chips. I think of them as the foundational chips, the chips that are most of the semiconductor industry business, maybe not the new flashy NVIDIA type sexy stuff, but these are the chips that power our machines and our automobiles. So what did Texas Instruments CEO have to say about what's going on in China? Check this out.
Now, in terms of the competition in China, I don't think that's, we've been very vocal about it. This is first not new. That the competition has intensified over the past several years, and I think it's growing stronger. I think it's a mistake for us to think that these guys are only doing, simple parts. These are very ambitious, highly educated competitors. And our job here in TI, and that's what I try to teach the team, is to compete. And I will tell you that, yes, the market is more competitive in China, but we can compete and we can win business in, very attractive margins. So we are going to continue to do that. Our objective is to continue and gain market share in China.
So a very ambitious, highly educated competitor. It's one to keep an eye on. All right, what's it all mean in Big Drill Down Earnings Takeaway? I'm gonna give you one number that tells you a whole lot right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
Texas Instruments reports their second quarter. It wasn't a great quarter. It was better than Wall Street expected. That's why the stock was up. But again, it wasn't great. Revenues of $3.82 billion. That was down 14% on a year-over-year basis. Just not good for this company. They want to do better. They want the turnaround to happen. It hasn't happened yet, and here's your proof. The one number that tells us a whole lot, the drill down earnings bite. 7, that's the number to remember. We have seen 7 consecutive quarters of decline in both revenues and in operating profits. 7 quarters of decline, not good for Texas Instruments. They think that might turn around towards the end of this year, but it certainly didn't happen in the first half, or indeed in any of the last 7 quarters. Thanks for listening to Drill Down Earnings. I'm Cory Johnson of 6.5 Media. And of course, you can check us out on X at Cory TV, at Drill Down Pod on TikTok and Instagram, and yes, on YouTube at the 6-5 Media page. Leave us some comments. Tell us what you think. Tell us what you'd like to hear, what you want to know. We're here to help.